Join us as we deep dive into Pakistan's financial markets, bringing you commentary, opinions, and analysis from the leading voices and experts in this domain. Together, we will learn how to capitalize on the opportunities and navigate the risks that are present. Our end goal? To become knowledgeable and confident investors. So let's go.
On today's show, we're excited to have Meenah Tariq. Meenah is a partner at Caravan, a global community-driven venture capital platform on a mission to help build and scale innovative startups in Pakistan. Meenah's background is in helping early-stage startups. She serves as a mentor, problem solver, connector for founders, and provides expertise and insights to accelerate growth. She also works with the World Bank to promote women entrepreneurship. On today's show, we discuss how VC investing works in Pakistan, understanding the important criteria when evaluating an investment in a startup, how startups make money for their investors, and then defining success parameters for a startup once an investment has been made. I hope you enjoyed this discussion as much as I did. Meenah, it is a pleasure to have you on the show. I am really looking forward to leveraging our discussion today using your deep expertise in Pakistan's venture capital space. And so with that said, I'll start off with a very basic VC 101 level question for you. And that would be, can you provide to us a high level understanding of the venture capital investing space? And then as well, how this industry plays a role in Pakistan's overall economy?
Okay. So for those of you, whoever's watching who might not be connected to this ecosystem, this might be a new thing that you're hearing about. VCs are essentially organizations, not really individuals. They're an organization that raises an amount of money, which they call their fund, to invest in startups. So they're a professional organization or company, you can say, whose sole job is to find good investment opportunities amongst startups and invest in those. They raise their fund from high net worth individuals, family offices, essentially rich people who can who have an investment portfolio overall, and they're usually investing about 5% of their total investment portfolio into startups. And because their core job isn't really investing in startups, they like to sort of outsource that job by giving that chunk of money to a VC and letting that VC then invest in a large number of companies, and then they get their share when the profit comes in at the end of the day. So a VC fund is a money manager in some ways for high net worth individuals, family offices, other larger funds. And like I said, our core job is to find great startups and good investment opportunities that will make money for our investors, who are called our LPs or limited partners. Does that make sense? You want me to go on, or anything particular that you want me to answer?
No, that's fantastic. And I'm sure we'll touch on more aspects of VCs as we start going through this discussion more and more.
Sure.
And then I think my question sort of related to that, Meenah, would be, how do you feel VC investing in Pakistan differs from this form of investing in the developed economies?
So at the core of it, it doesn't really differ as much. But at the heart of it, it doesn't really differ as much because we follow the same VC rules as are followed elsewhere. But of course, when you're investing in an emerging ecosystem, there's a different risk profile that you're looking at. Usually in an emerging ecosystem such as Pakistan, the risk is considered much higher, which also means that VCs generally believe that the reward is also going to be much higher just because this is such a new space. But overall, I mean, generally, I think we follow the same sort of patterns and rules that are followed elsewhere. But we can talk more about the Pakistani ecosystem. I think you asked a question about how VCs contribute to the economy of a country. Well, I think I'm a massive believer in entrepreneurship as a very, very strong economic force, as probably one of the primary economic forces that change the face of nations. For a country like Pakistan, with unemployment being so high, with a massive, massive youth bulge, which is also the potential we have, I think entrepreneurship is the economic force that we need to be focusing on, and we kind of are focusing on. And frankly, in expecting people to build great businesses without injections of capital is a little bit ridiculous. And that's the job that VCs are doing. Pakistan is still pretty cash strapped. There still isn't a lot of money in the ecosystem. And so the few VCs that are operating today are the ones that are giving injections of capital to high potential startups that do have the potential of exponential growth, that have the potential of hiring many, many people, of growing really fast and solving really great problems that the country has today.
Thank you for that introduction on venture capital. And like we said, we will get into more details. But I guess one assumption I'm making here, Meenah, is that investing in venture capital space is unique and different from investing in traditional equities that are publicly listed. And so using that assumption and to get a better understanding of this VC investing space, I'm going to ask you if you can sort of walk us through what your firm's investment criteria is when you're evaluating whether or not to invest in a startup.
Sure. So there's a few things that we look at. We look at how passionate the founder is. I think that's the founder is where we start and where we end. On that journey, the due diligence that we're doing or the research that we're doing, we look at whether the business model is robust, whether they have enough traction to show A, that the business model is robust, but also B, that the founder is passionate about the problem they're solving and kind of thinking holistically about it and is able to take a step back. That the founder isn't so deeply rooted in their own answer or their own solution that they would be unable to look at the bigger picture. We're looking at whether the market size is big enough, because I think the first question that you asked about how VC was different or how it's similar, VC return or the kind of returns that VCs want, I think is very similar across the board, which means that we're looking for companies that have the potential to go really big, because that's when VCs expect to make their returns. And that means that the market has to be big enough. So when somebody comes to me and says, we plan to have a revenue of $300,000 in year 5, that doesn't make any sense to me, because I might be looking for revenues of, $30 million by year 5, depending on what startup I'm evaluating in, what industry it is in, and what business model it's following. So having a market size that's really big, having a roadmap of how to get to the kind of penetration that is required for us to get our return, having an understanding of what strategies that company will need to take. So I think we generally have a lot of conversations with the founder throughout the process of the due diligence. We create a very detailed, even though our ticket size is pretty small. So Caravan does $50,000, but from the get-go, I think we made a very deliberate decision that the size of our ticket will not stop us from doing as detailed, a due diligence as is required, maybe for a much bigger investment. So we do a lot of industry analysis of our own. We look at macro trends. We look at how the money is flowing elsewhere. We look at comparables internationally. And we keep on talking to the founder. Because see, Altamash, we can come up with any strategy which we believe will make a company, phenomenally big. But if the founder doesn't buy into that vision, at the end of the day, it's their company. So you have to have that comfort level with the founder to be able to want to be in business with them for the next 10 years.
Thank you. Some great points there. And I'm going to touch on one thing you said, and perhaps this could be our next question. And that really is, given that these startups have been in existence for a relatively short period of time, how does your firm compensate for the lack of financial and business data that would otherwise be available in more traditional forms of equity investing?
I think there's some level of uncertainty that you have to be comfortable with as a VC investor, particularly as a VC in emerging ecosystems, right? There's, I think, there's a conversation that my husband is also in the VC space. He's also a partner at a venture capital fund. So him and I were having a conversation, and he said, well, if you expect a company to be perfect, then you're in the wrong asset class. If you expect everything in investment to be absolutely all the I's are dotted and the T's are crossed, you're in the wrong asset class. And I think you have to take that to heart. You have to understand that this is not the asset class where you get all your answers when you're doing your due diligence. You have to have the willingness to go find those answers. You have to have that willingness to pull an all-nighter to put a document together if they don't have that document together. You have to have that willingness to, go and do what they need to do when it comes to company registration or governance or whatever it takes. And I guess, like I said, when I said we start with a founder and we end with that founder, that's what I mean. That willingness is what we're looking for, and you have to be comfortable with some level of uncertainty. And like I said, I mean, we're all looking for the best risk profile for ourselves, right? And we're looking to find that asymmetric risk profile deal where you find a deal and you are somehow able to add value and minimize the risk as much as possible, while the upside being as great as you can get it to be. And that's the work that VCs in Pakistan today have to do with every startup they invest in. It is not the kind of investment for us where you write a check and you forget about it. Actually, portfolio management, and that this is globally as well. Portfolio management usually takes up, a large piece of time for any VC. Writing the check is just the end of one phase, and then the phase that comes after is much longer and takes a lot more of your energy. And that's where you're really actively trying to bring down the risk and increase the upside.
Yeah, thank you for that. And some key points you mentioned in that conversation were the focus on the founder, the focus on the business model, and then the target addressable market. I'm assuming that's what you meant by how big can this company grow.
Yeah.
And then that second piece was really about the VC providing value in the journey of the startup that you choose to invest in. So some really good points. Thank you for sharing. I'm going to ask you really on the investing side, and because this is an investing show, this concept of returns typically makes it to the forefront of our conversations. And so at a very basic level, Meenah, how do Pakistani startups make money for their investors?
So I don't think there's a startup today that has made money for their investors in Pakistan, right? We all understand that. Like I said, we're an emerging ecosystem. We're a pretty nascent entrepreneurship ecosystem. We really haven't had any major exits. Maybe people who, maybe there was somebody who invested in Taraz at some point that was Pakistani that got some money out of it. But right now, we're still waiting for those big exits to happen. So in Pakistan, we haven't really had a major IPO happen either. What we're looking for and what most investors are looking for or looking at today to measure whether we're being successful is the mark to markets, which means whatever valuation I put my money in, was the startup able to then go and raise their next round at a higher valuation. And if they were, and if that was substantially higher, if it was maybe 10x or 16x or 5x or whatever, I'm able to measure how successful I was in identifying a good investment. That doesn't mean I see a single dime up until this point. It just means that I know that the startup is going in the right direction. I will see money maybe 3 rounds from now, or 4 rounds from now, or maybe even 2 rounds from now for some companies, but it hasn't happened yet. For Caravan, all our investments have happened in the last 12 months. We've done 5 investments in 2020 so far. So what that means is we haven't even seen any mark to markets yet, because our startups will start to raise maybe 6 months to a year from now. We've seen some, like I said, good mark to markets, but so far nobody's really made any money. And again, to understand how VCs make money, a small VC will get bought out when a larger round happens some years down the line and a new VC comes in. Or some VCs will kind of stick up until the very end when the business goes public. But it hasn't happened for us yet.
Thank you for being so candid with that response. And I think that's the type of insight that a lot of the viewers are looking for. But staying on that sort of same topic, Meenah, I'll ask you, you mentioned the fact that IPO is really not a viable exit strategy so far in Pakistan. That sort of limits the way a VC fund can make money. And you alluded to perhaps a VC fund being their stake being bought out by perhaps a larger VC fund in some of the downs that may come in the future. And then so for an investor, I'll just ask you, what should be that approximate time horizon that they need to be looking at a VC investment as? I mean, are we talking a few years? Are we talking longer? And just again, this is the type of stuff I think that would be very useful for someone considering, investing in a VC fund specifically in Pakistan.
Sure. So you're looking at generally a 10-year period. Most VC funds are usually 10-year funds where they will be investing their money in the first 3 years approximately. And then the next 7 years, they'll be spending doing portfolio management, helping their startups raise the next rounds of investment, etc. And by year 8, 9, 10, maybe you will start to see some returns. So also, sorry, one other way, other than just the next round of investment, would also be international acquisitions. So because we see Pakistan as being such an emerging market, there are a lot of companies outside of Pakistan who would be looking to get in, and an acquisition is one strategy for global expansion for them. And that's what we've seen already with some Pakistani companies or companies operational in Pakistan, right? They were bought out by external players. And that's also why a lot of VCs will almost look to particularly invest in those startups which they see as having a potential of a buyout. Or even when we're doing our risk analysis, we will see, okay, was there a similar company in a similar ecosystem that was bought out by a large conglomerate? And so maybe that conglomerate could get attracted to Pakistan, et cetera, et cetera, et cetera. But the time period is going to be, 10 years is what you keep in mind.
10 years might sound like just routine business if you're in the VC world. I'll tell you, in the traditional equity markets, you applaud an investor who's able to stay invested in the market for a 10-year period. So I'm thinking here that anyone who wants to invest in the equity markets should perhaps get some training in the VC world first so that they can develop this mindset of a really long-term investment. And so thank you for sharing that. It's, I think, a very nice and interesting insight. In the equity world, Meenah, especially in the Pakistan Stock Exchange, we have something called the KSE 100, which is the broad market index, measures the overall market and how we're doing. And you're able to get returns of the KSE 100 quite well in the past. And so I'm going to use that same analogy, and I'm going to ask you, in the VC world, what would be that approximate compounded annual rate of return that an investor can expect to see over this 10-year holding period that you've alluded to?
So again, what we're talking about right now is all hypotheticals, right? Because nobody's really seen this happen up until today for Pakistan. So I can't give you concrete examples of so-and-so had this much return or so-and-so has this much return. So there is no historical data available to come to this. But the perspective that I can talk from is, what does a VC fund promise its LPs or need to promise its LPs? Because at the end of the day, any investment that you make comes at an opportunity cost, right? Because you could be investing in all of the other investments that you turned down to invest in this one, right? So if you're investing in startups versus the others, and Pakistan still has a pretty high interest rate. So generally, VCs will offer 4x returns over a 10-year, at least 4x return. That's the minimum. A minimum 4x return, which comes to, I think, about 17.5%, because that is what you would be compared to, considering the very high or considerably high interest rates that Pakistan has. And I mean, now the government has also launched these new bonds, which pretty substantial yields, particularly for overseas Pakistanis. So why would they give you money versus buying those bonds? Or why would they give you money versus doing something else which would give them a higher interest rate, right? So that's what you need to offer, or that's what you need to work towards, 4x or higher.
We've spoken quite a bit on the quant, and thank you for that. It provides our viewers with some really concrete information that perhaps I think they would be missing. And so how about we shift gears? We'll move from the quant to the qualitative. Mm-hmm. And I guess I'll ask you, how do you define a successful startup within your portfolio of companies that you have? And really, to drive the point home, Meenah, I'm hoping you can provide us with an example of a company within your VC fund that has attained this level of success that you'll be talking about.
So, like I said, because we haven't really, am I muted?
I can hear you. Oh, yeah.
Okay. Okay. I was saying this to somebody the other day. I think "Can you hear me" is probably going to be the phrase of 2020, right? Because we're constantly asking, "Can you hear me" on every single Zoom call. Um, so, like I said, we haven't really had a mark to market. So that's not how we can measure our success for now. How we measure our success is, are the startups able to deliver or execute on what they promised us when we made the investment 6 months from today or about a year from today? And it has been, I said in the VC, if you're a VC or you're getting into VC investing, you have to be ready for uncertainty. You have no idea how large an understatement that is, because I swear to God, your daily emotions go from here one night because you're so excited about something to like crashing because another portfolio company has some issues, and then up the next day because something great is happening. And it's like we have 8 children, and we're constantly being or trying not to be helicopter parents. But we also, so you have to sit back, you also have to let them learn at their own paces, and you have to applaud for them and be cheerleaders, but also be strict with them when they're not towing the line, and also let them grow. It is insane. It is insane, the kind of mental and emotional highs and lows that have been happening. And so when COVID hit, I think for a lot of people and even the general ecosystem in Pakistan, it was such a bucket of cold water in our faces all of a sudden, right? Because nobody knew. It was uncertainty on top of uncertainty. And then we started to recover, and so many of the startups, and again, like for our portfolio companies, some of the portfolio companies are doing really well post COVID because, for example, grocery delivery, it's great, right? The situation is great for grocery deliveries. Mini lockdowns are really great for grocery delivery, versus at home domestic help service on an hourly basis. A situation like this might be really bad for that company. We have a hospitality company that we invested in at peak lockdown, which was so interesting because that's not something you imagine happening. So yeah, I mean, long story short, I think it comes down to execution right now. But also, I think it comes down to openness. So if I say execution, for example, one of our portfolio companies, Grocer App, they've been growing really fast. During COVID, they were able to move from Lahore to Islamabad because again, they're one of those companies that have an uptake in demand. They were able to move into the Islamabad market. They're doing really well in Islamabad. They're getting rave reviews, and they're already, ready to move into multiple new cities at the same time, and they're working on that. Um, but other than execution, Altamash, if I'm being very honest, I think right now the stars in our portfolio companies are people who treat us like family or people who treat the investor like a partner. And again, that's also been my learning because I'm a first time VC, right? And so this is all very new to me. This is all stuff that I'm also learning. And a lot of it you learn when it happens to you. When you have 8 children like this, some of those children at the end of the day become closer to you just because of how they behave with you. And it's not that the others behave badly. It's just that every entrepreneur has their own comfort level. So every relationship with every startup ends up looking so differently that you can't really color them all with the same brush, as your almost singular blob portfolio. I don't know if that makes sense, or if I'm kind of being all over the place with this.
No, it absolutely makes sense. I mean, here I'm thinking about your piece that you mentioned about family and being very close to these individuals, and that's a special relationship. And so it absolutely makes sense. But I guess I'll ask you because you've made 5 different investments just in 2020. And so knowing that that's such an important part for you, how do you scrub for that? How do you screen for that? Before making an investment to say, hey, here is a group of founders that we think we can grow with, and we think we can onboard them to our culture, and there'll be sort of this reciprocity with a strong relationship. And I'm curious because you've articulated that is an important part for Caravan. How do you measure for that before
Very
investing?
important because Altamash, we've sat out on some of the more glorious deals because we didn't feel that connection with the founder, because we felt like the founder wasn't on the same wavelength as us. So, um, you know, so Jawad says this, and I don't know if I can use that word, so you can just beep me if I can't. But he says our core ethos is don't be an asshole and don't work with assholes. You can beep me if I wasn't allowed to use that word during the recording. But I think that is at the heart of it, what we try to do. So, the way we scrub for it is, like I said, having tons and tons of conversations. And I have people in our portfolio companies. I mean, everybody in our portfolio companies know that they can call us anytime. They can call Jawad, my partner, Ahmad, my partner, who are both in the Middle East, anytime. They can call me anytime. We've had conversations where we've had to, buck them up, really be their cheerleaders and say, no, this can happen. Let's do this. We've gone to bat for them. One of our portfolio companies that we announced recently, CoNatural, was able to close their raise in 2 weeks' time. And that came out of a late night conversation that Myra and I were happening, where we were having a back and forth about, and she was like, is this what I should be doing? Should I be focusing on this, or should I be focusing on the business? Should I even raise VC? She'd had some bad experiences before. She'd had some uncomfortable experiences before, and so she wasn't really sure. And I said, okay, here's what we'll do. We'll go for it for the next 2 weeks. We'll give ourselves that timeline, and if nobody bites, then we'll figure out something else. We'll take a different route. And for the next 2 weeks, we just focused on CoNatural. The whole, like all of our company, everybody on board just focused on that, and she was able to close, almost $1 million in exactly 2 weeks, which was amazing, right? And it was great for her. For Caravan, we've actually worked with some of our portfolio companies since before they became portfolio companies. Rumi, our hospitality startup, Dr. Asad, who's a founder, I've known him for a very long time, since I was actually working in Accelerator before. So we used to be in the same co-working space, and that's how I've known him. And I would go and have coffee with him, and we chat about digital marketing, and we chat about campaigns, and we chat about new ideas for growth. And this was way before he even decided to raise capital. But when he did, he called me up and said, hey, now I'm going to do this, and I would like you to be a part of it. Our portfolio company, Tajir, sorry, I was missing their name. Before they went to YC, they got connected to us, and they're very close to my partners, Jawad and Ahmad. And we were a part of their Y Combinator journey and getting into Y Combinator. And we've been a part of their journey since then. And so when they decided to raise post YC, they just called us up and said, hey, we'd really like you to be in, even though their round was really big and our ticket size is really small. So we've had that. And then we've had founders that on the call will say, you're barely offering any money. What do you bring to the table? And it's a fair question to ask. But then when you go into that conversation even further and you talk through what your offerings are and you feel like the other person isn't convinced, you don't push them. Because that's not the kind of, you never want a relationship where you're forcing somebody to accept you as part of, like I said, their family, right? So honestly, just having those conversations, and sometimes even pushing them on conversations, sometimes giving them that negative feedback or critique. And you will have somebody flare up or somebody say, how dare you ask me this question? Because I have a laundry list of investors who are begging to be in on this round. And who are you with your $50,000 check to even ask me about this? And you realize, okay, so not the right fit for us. And this has happened a number of times.
That's excellent. Thank you for that. And I'm not going to ask you to take any names, but that, again, good information for us to.
I think I'm already being very, very honest. So my issue sometimes is how direct I am in conveying my thoughts and feelings. So
I'm glad you are, because it's doing wonders for our show today. So thank you for that. I was going to ask you about the role the VC plays through the journey of a startup, but you've articulated that quite well. You gave me that example of the 2 weeks where you worked, side by side with the founder and raised a ton of money. And this was during a pandemic. So the fact that you're able to do that, I mean, certainly is, deserve a round of applause. So thank you again so much. Lots of information packed in your answer there. And I really enjoyed it. And as I wrap this conversation up, Meenah, I'm just going to ask you, what do you feel, especially when it comes to the VC ecosystem? When I say the VC ecosystem, I talk about firms like yourself, incubators, accelerators, entrepreneurs, other startups, all of them put together. What do you feel they will do moving forward to the economic landscape of Pakistan? How do you feel they're going to be impacting it moving forward?
So, like I said, I'm a big believer in entrepreneurship as an economic force, Altamash, and that is for my own self and my career so far, even before VC. So a little bit of my background: before VC, I was actually working in an accelerator program. I ran an accelerator program for about 3.5, 4 years in Pakistan, and I worked with a large number of entrepreneurs, and I was, very firmly on their side of the table, fighting their fight, getting things done for them, and wishing VCs were better somehow, wishing there was a way to get these awesome founders some money. Frankly, not really understanding what the VC perspective is, but just really staunchly on their side. And then when I left that, I started working with the World Bank, and I've been working with USAID on the small and medium enterprises activity. And my worldview kind of broadened up because I started to work with a different form of entrepreneurs. I started to work with, through the USAID SMEA project, with micro SMEs, with SMEs, with businesses that were just a single auntie working out of her own home, trying to get something done. And I trained with a 2-day training. I trained more than 500 of those women in tier 2, tier 3 cities across Pakistan. And that has been, I would say, life changing for me, right? Because it changed my perspective absolutely. And then during that time, I started working with the World Bank, where we were designing a project to support women entrepreneurs, particularly in the access to finance area across Pakistan. And again, that was a very different lens to take. And during that time, Caravan reached out for me to become a partner. And I was just thrust into the VC space, which, like I said, I didn't really know much about. So, first time VC in an emerging ecosystem, learning everything from scratch, with pretty much everybody else also being first-time VCs, right? If you look at every VC in Pakistan, pretty much everybody is a first-time VC. Everybody is at their fund one. So we're all still learning and still making mistakes. I have seen at the most micro level entrepreneurship change people's lives, their own lives, their families' lives, their communities' lives, their societies' lives, and at the in the largest possible investment round raised, um, how that company then impacted so many people. I mean, if we take an example of a startup that has impacted Pakistan phenomenally, we can talk about Kareem. You talk about Baikia and Kareem. I mean, before Kareem, I was in the US and I used to use Uber, and I was like, I wish this would come to Pakistan, but I could never see it happening, because how could you ever have imagined somebody would get into a stranger's car in Pakistan? And now you have it in every city. You have it in Quetta, you have it in Peshawar, you have it in Multan, you have it in, you have it across the city, and people are earning money through it. And not only earning money, small businesses use WhatsApp to run their own stores and use Baikia and Kareem to deliver their products. It has, these companies aren't social, they're not social enterprises. Easy Pesa and Jazz Cash, the mobile wallets, aren't social enterprises. But oh my God, when you talk to those MSMEs and the SMEs, and you realize that the impact they've had from these startups, from Kareem, from Baikia, from mobile wallets, from all of these options, from Daraz, being able to sell on Daraz, from OLX, being able to sell on OLX, it it makes you a believer if you weren't a believer, and I was already a believer. So it's just, I think, I truly believe in the work that all of us are doing together, and I think this is a great legacy to have if we're able to create even this small impact, with a little piece of our lives. I think it's a great legacy to have.
Thank you. Some great information. I think you've already touched on this, especially disruption that's happened in the past few years. Again, I'll ask you to take a lens and perhaps look forward. And I'll ask you, could you share with us, and it could be just short, buzzwords even, but examples of disruption in customer behavior that you expect to see in Pakistan in the coming years?
So I think anything and everything online, basically. I think with COVID, a lot of the customer behavior shifts that were probably going to happen over the next 10 years, we're already seeing happen in a very, very, short period of time. So the shift online has been huge. The number of orders that people are now getting on their website versus getting through phone calls has been pretty big. I think using mobile wallets, we're already seeing a shift towards digital banking, digital wallets, and the adoption of all of these have already been game changing for a lot of startups, and we're going to see more of that. Fintechs have sort of been a bit leashed in Pakistan so far, but I think the next couple of years might be big for that. We're still waiting to see a big we're still waiting to see the number one, number two, number three emerge in health techs and ed techs. And it's also going to be interesting to see what happens with that. I think some kind of different models like cloud kitchens are sort of becoming interesting this year. But we'll have to see what people come up with when it comes to that. I think earlier this year, with the Bazaar, Tajir, sort of mom and pop retail distribution networks. See, Altamash, again, for Pakistan, we're an open playing field right now, right? Pretty much every big industry has tons of money, the very rich industries, and they're completely undigitized. And the government we have right now is very pro digitization. They're very anti-corruption, and to combat corruption, they look at digitizing as one of those avenues. So whether it's real estate, property and real estate are super, I don't want to say super corrupt, but they have a lot of avenues of corruption built into those systems for various reasons, right? So digitization, like the prop tech space, is wide open. There's pretty much nothing happening right now in prop tech in Pakistan, and it can be huge. The legal system has so many loopholes, and if somebody can come in, find a way to digitize some of that, that could be great. Health, education, like I said, fintech, those are all areas that we know. Hospitality, we have a hospitality startup called Rumi, and I think they're going to do really well because, again, they're bringing accountability to the hospitality sector. We have a beautiful north, which gets a lot of tourists, but the quality of service was really bad because there was pretty much no accountability. So yeah, so I think anything that creates some level of accountability um, through digitization and digitizes an old industry which has been doing things, in a very old-fashioned way and brings it up to speed with the rest of the world, I think has potential to be big. We have a really big population, and I think anything you do, if you're able to find some level of product market fit, you'll find a few million people ready to use it at the very least.
Meenah, thank you for the stories, the insights, and most of all, your passion when it comes to all things entrepreneurship. And what I really enjoyed in our conversation today was you've worn so many hats. You've been an entrepreneur, you've worked in an accelerator or incubator, and then you've made this leap to a VC fund. And so you've seen entrepreneurship from all of these different lenses. And that really came out in our conversation today. So thank you for sharing all those different perspectives. For the audience, I'm going to say, if you haven't seen Meenah's TEDx talk titled How to Invest in Yourself, then I highly recommend it. It is on YouTube. And I'll just tell you, I watched it with my family and it was very inspirational stuff. So thank you for doing what you did on that stage. It was some really good information.
That makes me so happy, Altamash. Thank you so much. That's probably one of the best things you could ever have said to me.
Well,
I also want to add, it has been my privilege to have done what I've done. And I think one of the things that I've recently been able to do is now work with the government. And I think that, the lenses that I was talking about and the perspectives that I was taking, when you're on one side of the table, it's so easy to look at the other and think they don't get it. And then you're on the other side of the table and you realize, okay, they got it, but they had their own issues. And then you look at somebody else and think they don't get it, right? And so I think developing that empathy as our ecosystem grows is very, very important. And I've had the privilege to have been able to do all of this work, but thank you so much for inviting me, and thank you so much for watching my TED Talk.
Oh, my pleasure. And I'm going to ask you for one final question. It's an easy one. And that is, how can our audience follow your work, Meenah?
So they can follow me on LinkedIn. I usually post about my work there. I'm not really very active on Twitter. I would also love for them to follow Caravan, our venture capital fund. And Caravan, like I was telling you, Altamash, also has a podcast. And like yourself, our ideology, and my partner Ahmad does it. He does a really good job at it, just like yourself. The ideology is the same, where we're trying to get those voices out so that there is less opacity and people are able to look in more and more, and again develop some of that empathy that I was just talking about as well. And so we have some really great people featured on there as well. So if people can give that a listen, that would be great.